Hey, Bobby Trades! I wanted to do a video analysis update of the stock market. We'll talk about the S&P, as well as XOK, Apple, and Microsoft, AMD and Nvidia, Astrazeneca and XLV, Walmart, John Deere, and Uranium Fuels, Boeing, JetBlue, and Tesla, Enphase Energy and First Solar, NEO, Alibaba, and NetEase, JD, Amazon, Squarecash, Roku, Snapchat, Facebook, Ethereum, Bitcoin, and Solana. So, we'll start with SPY. It forms a wave 1 and a wave 2. Then has this big wave 3 that did go past the length of wave 1, placed at the wave 2 low, as we expected, and now it is ending a wave 4 at the 38.2 to 50% fib. So we're pretty close to 400, but if we're above 400, I believe that this is the wave 4 that's ended. The length of wave 1 placed at the wave 4 low would then give a conservative wave 5 target of about 545, 550. And if we go beyond that, there's a chance that this is not another wave 3 and a wave 4. It could be another wave 1 and another wave 2, which is something we'll talk about with XOK right now. So SPY above 400, I think it's heading up into the 540s, into the 550s. Now, what do we go below 400? If we go below 400, then the 50 to 61.8% fib of 380 to 400 is where a wave 2 could end anyway. So we'll talk about what that would look like with XOK. I'm not betting on SPY going below 400. I think it'll hold and head up to the 540s. If we look at XOK, I believe this is a wave 1 and a wave 2. And I think that this is either a wave 3 and a wave 4, or it's another wave 1 and another wave 2. So I just kind of showed the wave 3 and the wave 4 idea with SPY. I'm going to show the wave 1 and the wave 2 idea with XOK. Because if we look at XOK, it does a few interesting things. One thing it does is that from this March 2020 low, it goes on this big rally and it makes a new high in price, but it also makes a new high on the relative strength index. And there's a rule in Elliott wave theory that says wave 5 must end with momentum divergence within the same cycle. So since from this March low, we make a new high in price and a new high in RSI, which is what Microsoft does as well, this supports the idea that this is not a large wave 5 that's ended. I think this is a wave 1 and a wave 2 that's ended because we're right at the 50 to 61.8% retracement. So I just showed the wave 3 and the wave 4 idea with SPY. But if we look at XOK, even if we went a little lower, right, we're basically where the length of wave A placed at the wave B high is where wave C would end anyway, in the 130s. So the 50 to 61.8% fib is where I believe XOK is ending wave 2. So above 123, the length of wave 1 placed at the wave 2 low would then give a wave 3 target of about 200. Now in this view, that would be the conservative wave 3 target, because wave 3 a lot of times can go to the 161.8% extension of wave 1. Now, a lot of people think that's, too bullish, right? Well, I would point out that there are kind of global markets that may be supporting the more opportunistic idea, right? When we think about the big opportunities, they make them the most difficult. This is certainly the most substantial correction that we've had since March of 2020, at least in time, but I think also in price too. And I think if we look at the DAX, if we look at the emerging markets, if we look at, XOK itself, even, some of the growth stocks we'll get into, we have this idea that they could be getting us out of something that's, a pretty substantial rally, not just, even in the long term, but I wouldn't be surprised in the short term. This really caught a lot of people off guard. If we look at the DAX, this is an ABC correction, and I think this is a wave 1 and an ABC wave 2 that ended at the 56 to 61.8% fib. So the length of wave 1 placed at the wave 2 low can take the DAX up to 43 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then the DAX can go up to the 50s. So I don't think that XOK going to 200 is outlandish. And we look at some of these other foreign indices. I went over the emerging markets a lot in my last video. I went over the Hang Seng. I've gone over, a lot of the foreign indices, but even the American indices. If we look at XOK, I think this could be a wave 1 from the low that formed in September of 2020. Now we're at the 50 to 61.8% retracement, which is where a wave 2 can end, and we can enter wave 3 or wave 3. So above 123 is a little wide, but I wanted to show the wave 1 and the wave 2 idea with XOK because I showed the wave 3 and the wave 4 idea. In this, scenario, XOK going to 200 is just the minimum wave 3 target. We could have a shallow wave 4 and a wave 5 higher. So what would that look like on Apple? Well, Apple's getting pretty close to this low right here of 150. But I think we haven't broken it yet. Even if we did, I'll go over what that would look like. I think this is a wave 1 and a wave 2 for Apple. I think this is a wave 3 and a wave 4 that ended at the 38.2 to 50% fib. So from this low, I believe we formed a wave 1 and a wave 2, and that means that we're going to extend, in my opinion, into a wave 3 up to the 200s, and that's going to be part of a large wave 5. Wave 5, in my opinion, is going to be the length of wave 3 placed at the wave 4 low. I think ultimately Apple's got a path to 216. Now, very kind of similar to SPY, if Apple fell into the 140s, well, that's the 50 to 61.8% retracement of this rally anyway, where, you know, maybe it's not a wave 3 and a wave 4, but it would just be another wave 1 and another wave 2. I'm still looking for this rally to get replicated. And ultimately, I think Apple's going up, you know, to the 210, 215 range for what would be waves 1, 2, 3, 4, and 5. So above 141, I think the length of wave 3 placed at the wave 4 low is going to give a wave 5 target up in that 210, 215 range for Apple. If we look at Microsoft, it's almost identical to XOK, kind of showing that two, you know, possible targets. I think this is a wave 1 and a wave 2, and then just like XOK, this huge wave 3 that makes a new high in price and a new high in the RSI. By the way, we predicted that Microsoft would go on a pretty substantial rally right around this time last year, right? Everyone said Elliott Wave was voodoo. I remember specifically my post in May, mid-May of 2021, I talked about Nvidia possibly exploding, Apple possibly exploding, Microsoft possibly exploding. And I remember someone commented on that post, this trade's failed for a month, right? Well, sometimes, you know, the best opportunities, that they're going to wear you out for, you know, a month, right? If the 1 month is too long for you, right, then you need to, you know, go become a day trader or start gambling on basketball because a lot of the best opportunities, they're going to take a little time. And I think that 1 month, you know, was worth it for last year. Microsoft, Apple, you know, basically all big tech, which was basically the entire market. But Microsoft did explode on this huge wave 3. And when it did, it broke to a new high in price and it broke to a new high on the weekly RSI. I think now that was a wave 3 that's ended, and we've very similar to XOK. We're at the 38.2 to 50% fib. So this is where a wave 4 can end. The length of wave 3 placed at the wave 4 low can take Microsoft up to 419 for a wave 5 target. So above the 61.8% fib of 254, the length of wave 3 placed at the wave 4 low gives a wave 5 target of about 419 for Microsoft. Here is AMD. I think AMD last night, it was taking up almost every slot on the bar chart, straddle, and strangle screener. I know that people, you know, get annoyed at me saying bar chart, straddle, strangle screener. You probably hear it in your sleep, you know, before you go to bed. But last year, you know, and what we see time and time again, you know, very recently with oil, we're probably about to see it again with tech, is that stocks that have a long trading history, stocks that are, you know, typically more on the value side, this works better. But really, if a stock's a huge component of a big index and, you know, has really been trading for a while, let's just look at it right now. If we go to the long straddle, we'll probably see AMD right now. But I can show you guys what I'm looking for. So this is screening for stocks that are having a lot of options accumulated by large institutions. That doesn't guarantee that any of these stocks are going to go to the upside. But what we can objectively say when we look at this list is that institutions are expecting Apple to have a large move away from 160. They're expecting American Airlines to have a large move away from 19. They're expecting Tesla to have a huge move away from 915. And they're expecting NIO to have a large move away from 17.50. Now, of course, all of those moves could be right to the downside. They could be. What we've kind of seen after a while is that even if they're to the downside at first, a lot of times the volatility resolves to the upside. And last year, Apple, Tesla, Nvidia, which are all in these, you know, same screeners right now, we saw that exact same phenomenon where even if they, you know, dipped a little bit, eventually the huge move that the institutions were playing was to the upside. The reason I say that is because Apple, AMD, Microsoft, right, the whole, you know, Brady bunch essentially, it's all over the screener again. So that's how, at least for me, I can, you know, get one of the few guarantees in trading, in my opinion, is that I'm not going to be in a stock that's going to consolidate for a while. I'm either going to find out I'm wrong pretty quickly, or I'm going to find out that I'm correct pretty quickly. And if I am correct, then the move tends to be very sustained. That's another big example. If I catch, you know, one of these stocks, it's not something that, you know, quickly fades back. A lot of times it is a sustained rally. So if we look at AMD, I think this is a 1, 2, 3, 4, 5, a huge wave 1. And all those readings, right? I was called up, AMD, AMD's still going down. AMD is a POS that doesn't move, right? And guess what? The institutions, they're just comfortable waiting longer than a month, right? Sometimes you got to wait, more than a month. We're not betting on how many points LeBron's going to score tonight. I think this is a wave 1 and a wave 2 for AMD that ended at the 78.6% fib. The length of wave 1 placed at the wave 2 low says ultimately a pretty conservative wave 3 target in the future could be 175. So AMD above 72, I think it's heading to 175 for what, in my opinion, is going to be a conservative wave 3 target. So we'll talk about some, maybe some supporting evidence from the clean energy sector when we get there. Here's Nvidia. Very similar idea. Nvidia, Tesla, AMD, in my opinion, they're all pretty likely to move together. I think this is a wave 1 and a wave 2. This is a wave 3. And it's getting a little silly to call this a wave 4 because we're at the 61.8 to 78.6% fib. But it would be a little too bullish if I call this another wave 1 and another wave 2, right? A lot of people don't like when I call everything an S. But I can tell you right now, if in the future we go see NVIDIA's weekly RSI break above 85, then this would be confirmed to be a wave 1 and a wave 2. We'd be within wave 3 or wave 3. But I think right now the more conservative view is probably the more accurate view with NVIDIA. This is a wave 1 and a wave 2. This is a huge wave 3 and a wave 4 that ended at the 61.8 to 78.6% fib. So I like 165 right now as the 78.6% fib. Above that, the length of wave 3 placed at the wave 4 low, or the length of wave 1 placed at the wave 2 low, give the next kind of equal legs target of about 413. So that's NVIDIA, that's AMD. I think for NVIDIA, holding above 165 is great. We also want to see AMD above 72. Here's Astrazeneca. I want to do some of these boring value stocks just because, recently, we had that Friday where we got $1 away from a circuit breaker on the NASDAQ. So everyone thought the market was going to crash, right? The VIX is in the 30s. And to be honest, right, a trader kind of has to always be prepared for the market to crash, right? Because that's always a possibility, right? So that's something that I use option straddles to kind of buy the volatility. I buy the volatility that everyone's, afraid of, and a lot of times it resolves to the upside. So I went over my a lot of the risk management that I'm doing that's a little more active than simply position sizing in my last video. I think for Astrazeneca and the next few stocks we're going to go over, there are a lot of evidence from a Elliott Wave perspective, right? Remember, this is all from an Elliott Wave perspective, that if Astrazeneca is going to go reach what I believe are pretty reasonable targets in Walmart and John Deere, then it's unlikely that the stock market would crash during that time. For AZN, this is a wave 1 and a wave 2 in the healthcare name, and we've gotten pretty close to that, minimum wave 3 target. From this low, I said we formed another wave 1 and another wave 2, so the length of wave 1 placed at the wave 2 low would give a conservative wave 3 target. Then we'd have a shallow wave 4 that retests the wave 1 high, and then the length of wave 1 placed at the wave 4 low, right, would take Astrazeneca up to 82. So I think that 82 is ultimately where this wave 3 is going to end within the cycle from March 2020, wave 1, wave 2. So I think this wave 3 is in progress right now. This is wave 1 of wave 3 and wave 2 of wave 3. This is wave 3 of wave 3 and wave 4 of wave 3. The length of wave 1 placed at the wave 4 low can take AstraZeneca up to 82. In my opinion, that just ends wave 3 from the March 2020 low. We have a pretty long sideways consolidation period for wave 4. But remember, AstraZeneca pays a dividend. So it's one of those that kind of pays people to let time go by. Anyway, I'm a big dividend person. Anyway, this is a wave 1 and a wave 2. So I think that 82 is where a wave 3 ends before a sideways consolidation period before a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then ultimately AstraZeneca can head up to the mid-90s for waves 1, 2, 3, 4, and 5. And it's pretty unlikely that we'd see the market crash during that time, especially since AstraZeneca, I don't know if it's in XLV, but it's certainly a healthcare name. I know a lot of these stocks have, all their special fundamentals, but they're in the same sectors, right? And I think the healthcare ones especially, where you kind of realize, oh, wait, we are looking at, sector ETFs, because how could all these stocks just be having all these breakthroughs at the same time? But anyway, that goes over most people's head. I think this is a wave 1 and a wave 2. I think that's a huge wave 3 for XLV. This was wave 1 of wave 3, wave 2 of wave 3, wave 3 of wave 3, wave 4 of wave 3, and wave 5 wave 3. So that just kind of shows us a pretty clear, impulsive 5-wave subdivision. I think this is a wave 4 at the 38.2% fib. I think they're making it pretty tight, but I think we're within wave 5 right now. This was wave 1 of wave 5. This was wave 2 of wave 5. So the 161.8% extension up there above 121 to 124. Let me make sure my fibs are perfect. I'm kind of OCD about my fibs. Yeah, 141, 121. to 124. I think this is wave 1 and wave 2. So the 161.8% extension of wave 1 above 121 to 124 can take XLV up to 155 before a shallow wave 4 and a wave 5 higher. I think ultimately the length of wave 3 placed at the wave 4 low takes XLV up to 165. Unlikely that the market would crash during that time. Walmart, another one, well, it's a consumer staple, well, it's also a retail stock. And some of those retail ETFs, and it certainly coincided, rally with Walmart during 2020, coincided with a rally in Walmart. In my opinion, the market in Walmart are going to move to the upside again. I think this was wave 1 and wave 2 for Walmart. And from this low, we formed another wave 1 and an ABC wave 2 that ended at the 61.8 to 78.6% fib. I said the length of wave 1 placed at the wave 2 low. It's going to take Walmart up to 158 before a shallow wave 4 and a wave 5 higher. The length of wave 1 placed at the wave 4 low ultimately says waves 1, 2, 3, 4, and 5 can end this red wave 3 for Walmart up at 178. So we'd see a consolidation period, kind of like Astrazeneca. When it gets to 82, I'm expecting the consolidation period, right? But that wouldn't be the top. That would just be a wave 4 consolidation period and a wave 5 higher. If wave 5 is the length of wave 1 placed at the wave 4 low, then I've gotten written right here. That could take Walmart up to 205 in the long term, right? It's unlikely, in my opinion, that, if AstraZeneca's got 30% upside, Walmart's got 30% upside, that the market would crash during that time. I think one interesting thing about these kind of stocks is they're in the dividend sector. The market's organized on ETFs, and, this is kind of a good sign, in my opinion, for, a lot of dividend stocks, that we could, if we're seeing Walmart in the 200s in the future, if we're seeing AstraZeneca in the 90s, probably a lot of other dividend opportunities are out there. I think John Deere might fall in that category. I think this is a wave 1 and a wave 2, a huge wave 3, and a wave 4 that ended at the 23.6 to 38.2% fib. Notice this ABC correction, a perfect length of wave A, placed the wave B high, being where wave C ended. I think from this low, John Deere formed a wave 1 and a wave 2 at the 61.8% fib. So the 161.8% extension of wave 1 gives kind of a shorter term wave 3 target of about 522. I think ultimately this large wave 5 in black, kind of the bold black, is going to be the length of wave 3 placed at the wave 4 low. And this classical bull flag, right? The classical bull flag is going to play out, in my opinion. John Deere should reach 616 in the future. I think the path to get there is that this is wave 1 and wave 2. So we're going to see a wave 3 go extend to 522 before a shallow wave 4 and wave 5 higher. Ultimately, waves 1, 2, 3, 4, and 5, in my opinion, in the big picture, can take John Deere up to 616. That's a huge component of a lot of industrial ETFs, right? So the market's going to crash while, healthcare, industrial, and retail stocks do well. Probably not, but maybe because they pay dividends. Who knows? Anyway, this is the wave 1 and wave 2 for energy fuels. And one thing I'll point out, I was going to talk about Denison Mines. I thought that was a little too value-y. But I like Denison Mines. Anyway, UEC already broke above this high. I think a few others. I think CCJ's broken above this high as well. I believe they're acting as a leading indicator. We've also kind of seen a little rarity that CCJ, UEC, and Denison Mines on the bar chart straddle and strangle screener. So they're looking for a big move in those stocks. If they're playing a downside move in Denison Mines, then that would be a little surprising to me. But I think they're playing a move to the upside, and I think the Elliott wave certainly supports that. I think this is a wave 1 and a wave 2 for uranium fuels. This is another wave 1 and another wave 2. So the length of wave 1 placed the wave 2 low, says ultimately a very conservative and kind of silly wave 3 target is 12.50. We'll talk about why that's silly in a second. But even if we had a shallow wave 4 that retested the wave 1 high, and wave 5 was the length of wave 1 placed at the wave 4 low, ultimately uranium fuels could go up to 18, in my opinion, to end this black wave 3. This would be wave 1 and wave 2. The black wave 3 could go all the way up to 18. I believe the 161.8% extension of this wave 1 is 15. So 15, and 18, I think down the road are going to be hit. A nice kind of stop is 5.46. I'm in uranium fuels. I'm going to hold it. I sold half from an entry around here, up here, but I'm going to keep holding uranium fuels. I think right now, above 5.46, there's pretty good risk reward to that wave 3 target of 15, but ultimately waves 3, 4, and 5 can take UU up to 18. In my opinion, that's just going to end this black wave 3. We'll have a consolidation period, a scary consolidation period for wave 4, but ultimately I don't think 18 would be the top either. And I think from this low, we're kind of getting that more explosive look. I'll talk about Enphase. I'm not correlating Enphase and uranium fuels, but kind of a similar, another wave 1, another wave 2. We could see this get a little more explosive, maybe even in the short term. So I wanted to touch on oil. I'm not gonna make you guys listen to the Chevron and the ExxonMobil rant, but basically I think that Chevron's confirmed in the big picture. It's heading up into the 200s in the long term, right? We don't roll our eyes at long-term counts for oil now like we used to, but I think Chevron's heading up to the 210, 240 range. And I talked about before how, comparatively, if ExxonMobil goes and follows Chevron above that 2014, 2015 high, in the big picture, in the long term, hopefully, ExxonMobil can go up to 200, right? And that would be pretty horrible for people who have a gas bill. I think they report earnings soon. They're kind of in this more energy infrastructure related idea, but this is a wave 1 and wave 2. I think this is another wave 1, another wave 2. So they report earnings tomorrow. I think we could see we're going into that wave 3 of wave 3, kind of explosive move right now. The next target is 4.47 to about 15 before a shallow wave 4 and a wave 5 higher. I think rig might be a little more of an opportunity. I've looked at the rig chart in a little bit, but Transocean, it's up 8%. Great job, Pup. Talk about a stock of 8%. But anyway, I think this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low is going to take rig up to 7. And I think rig getting to 7.90, again, that's probably where we see some consolidation, but I don't think that'd be the top. I think we'd have a shallow wave 4 and a wave 5 higher. So anyway, I'm just giving reasons not to bet against oil. I think uranium fuels really supports that. And I think, that we've seen in the first quarter, certainly that oil had all the fun. The transportation stocks did not. But I do believe we're going to see that the correlations play out. I'm not getting too caught up on, the correlation between, oil stocks and, transportation stocks. But I have heard some people complain that their airline tickets and their travel prices are getting higher. So that was one thing I'm looking for. I think this is a 1, 2, 3, 4, 5 wave 1 for Boeing. If someone wanted to do it a little different, called a leading diagonal, it's the same, idea. I think this is a wave 1 and a wave 2 for Boeing. This is a wave 2 that ended at the 61.8 to 78.6% fib. I'm not sure if I have it marked up right now, but on this all-time chart, yes, it could be that was wave 1 in the big picture. And this deep correction, certainly not the sideways wave 4, could have been wave 2, and Boeing can enter wave 3 or wave 3. So I don't have this fully marked up. It's not as pretty as I'd like it to be, but I think that this wave 1 and wave 2, kind of similar to JetBlue, which I'll talk about, kind of similar to Disney, which I talk about a lot. This wave 1 and wave 2 could be entering a wave 3, not just in the kind of the medium term, not just within the cycle from the March 2020 low, but also in a much bigger count, where this is all wave 1 and wave 2, and this is a huge wave 3 in progress. Ultimately, Boeing could go beyond, the 450s pretty substantially. I think that we get that message with Southwest Airlines. We get that message with a lot of the airlines, even some of the cruise lines, even, Disney in the travel sector, that we could see, not just a wave 1 and a wave 2 develop from the March 2020 low, but this is part of a much bigger count, right? And a lot of people, they don't like thinking about long term, right? Because, they could get called a bag holder tomorrow. But what we've seen with oil, what we've, seen with a lot of, stocks, long-term counts eventually become short-term counts. And I think that this is going to be one of them. This is a wave 1 and a wave 2 for Boeing at the 61.8% fib. The 161.8% extension of wave 1 gives a wave 3 target of about 392 for Boeing before a shallow wave 4 and a wave 5 higher. And I'm still looking at the much bigger charts for Boeing because I think that this could all be, I don't want to say a blimp, but in the big picture, this could be a huge opportunity looking back. The company that makes, all the airplanes, all the, really a true monopoly at the 61.8 to 78.6% fib on the all-time chart. These red fibs right here, the 61.8 to 78.6% fib on the all-time chart, and the 61.8 to 78.6% fib on, the more short-term, kind of weekly chart. I think we could see a huge wave 3 of wave 3, begin. I'm not trying to get grandiose. I think 129 would be a little tight. 89 would be a very wide invalidation. I think 129 is a great level for the beta of Boeing. But if we look at JetBlue, if we look at, Disney, which I talk about a lot, there is this, tendency for me to stay focused on the bigger picture. I think this is a wave 1 and the ABC wave 2 for JetBlue. I think this is another wave 1 and another wave 2 at the 61.8 to 78.6% fib. They weren't going to make the super cycle low in transportation easy, right? And one thing I talked about with oil, one thing I continue to talk about with precious metals, yeah, you can become an accountant, but there is a margin of safety with some of these value names where, in my opinion, an investor realistically, objectively is not trading against zero. All right. Now they could, right? But, for me, I don't look at, some of the value names I own and think that, man, I'm trading against zero. The growth names, on the other hand, the growth names could. But I think, JetBlue, Boeing, maybe a lot of the gold and silver miners, there is that added benefit of, possibly a fundamental margin of safety. I think this is a wave 1 and a wave 2 for JetBlue. A massive wave 3 is in progress, in my opinion. Just like Boeing in the short term from this low, wave 1, wave 2, in my opinion, getting called a bag holder is going to be worth it. How long did we just see Chevron consolidate? How long did we just see, ExxonMobil and all those oil stocks? They consolidated for 6, 7, 8 months. You felt like an idiot, if you owned them. And, now you look like the smartest man in the room. But it's not about looking smart. It's not about looking like an idiot. It's about being diversified, right? I got into, a lot of the oil and the energy plays, not because of, what I thought about Vladimir Putin, but because of what I saw in the options market, what I saw in the Elliott wave perspective, and I really wanted that diversification. I thought that was in the dividend too. But anyway, that's a little bit of a rant. This is JetBlue wave 1, wave 2. I think this is another wave 1 and another wave 2. Just like Boeing, we can see a massive wave 3 begin. I think we started to see, by the way, the next wave 3 target is the length of wave 1 placed at the wave 2 low. If it got really crazy, that 161.8% extension of wave 1 would be where I'm looking. If we got above 21, I think 31 could actually be where this wave 3 ends before a shallow wave 4 and a wave 5 higher. So that all seems outlandish now. I don't think it's going to stay outlandish. I think above 9.89, pretty good risk reward. The widest invalidation would be 6.61. I think for a lot of the airlines, they have to be kind of traded as a sector. I talked about Southwest Airlines in my last video. So here's platinum. I wanted to talk about one of the metals. I think this is finally kind of turning around. But I've talked a lot about how historically, before 2020, there was a very uncanny correlation between oil prices and platinum prices. I think this is a wave 1 and a wave 2 for platinum. And I think that there's a big elephant in the room that traders need to be looking for the stocks and the sectors poised to follow oil, right? It's just kind of that simple. We got a massive leading indicator from oil. Like, hey, this whole sector that was asleep for 4 or 5 years, it's awake now. Right, and guess what? It's not going to be the only one. I think that one place to look is the precious metals. Another place to look, is the transportation sector. Very similar ideas. I think this is a wave 1 and a wave 2 for platinum. The length of wave 1 placed at the wave 2 low can take PPLT up to 150 before a shallow wave 4 and a wave 5 higher. For me, platinum literally can't go to zero. I think 69 would be a very wide invalidation. 80 is a little tighter, but the length of wave 1 placed at the wave 2 low. Says, I think, by the way, the correlation coefficient for platinum, just off the top of my head, I think it's like negative 0.04. So pretty solid diversification piece for a lot of the metals, in my opinion. So wave 1, wave 2, the length of wave 1 placed at the wave 2 low can take PPLT up to the 150s. A lot of people think you got to pick the metals or you got to pick the market. For me, I pick both. I like being in both. Anyway, here is Tesla. Here's Enphase Energy. We'll talk about some fun stocks. I know most of you guys just kind of skip through the value part, but sometimes the value stocks get their rotation, right? And so if you think value stocks are boring, then when oil explodes and when some of the dividend stocks explode, right? Then you're not going to participate in that, But this is a huge wave 1 and a wave 2. The whole point is that the market rotates, right? The sector that's, really attracted to a lot of retail traders now, in the sector that's getting, dumped on right now, by retail and, you're getting made fun of. Usually, one of those sectors is the one being distributed and the other one's the one that's next in the rotation. I think one thing we could see is that we've seen a lot of kind of energy plays have a lot of alpha. And while I certainly don't support, shorting energy or anything like that, I think that there could be the rare-ish opportunity that some of the diversification now is in tech. Some of the, the new alpha, in the coming, this quarter, the next quarter, could be in the sexier names, right? And the sexy names, no one ever wants to own the sexy names when they're down, right? But they're always kind of obvious in hindsight. I think Tesla could be an example of that. Tesla, I'll say right now, I'm going to look at Tesla, Enphase Energy, First Solar, and NEO kind of as like their one stock. You know, I'm going to look at them as the whole clean energy sector. I know that, you know, we have the fun CEO with Tesla, but really it's super important to trade and analyze stocks as members of a broader sector, right? Whether that's Bitcoin, whether it's Tesla, whether it's you know, any stock, right? Unless it's a true unicorn, maybe like Peloton or something. But even then, you know, it's always best, especially if a stock's in a bunch of ETFs. It's a large holding of an ETF. It has to be analyzed as a group. And I think Tesla's in the clean energy sector. It's a big holding of QCLN with Enphase Energy and with NEO. So that's kind of my basis for correlating those three. And I think there's a lot of evidence from Enphase that we'll go over with Tesla right now. I think this is a wave 1 and a wave 2 on the all-time chart. But really all that matters for Tesla, for all intents and purposes, is from this low. I think this is a wave 1 and an ABC wave 2 that ended at 700. So the length of wave 1 plays at the wave 2 low. If 700 continues to hold, that's a little tight for Tesla's high beta. But above 700, there's a pretty straight line to 1400. And that would be a pretty conservative wave 3 target. Because a lot of times, wave 3 is the 161.8% extension of wave 1. I think that's about 1600 or 1700. But all I'm trying to show, I think this is a wave 1 and a wave 2. I believe wave 2 has already ended at 700. Now, if we go below 700 to 690, that's the 78.6% fib, and I'm going to have to kind of update Tesla anyway. The widest invalidation is 539. You know, from 919, that's obviously too wide. Tesla went up a little bit. Anyway, I think the widest invalidation is 539. I think a nice level right now is 690 to 700. Above that, the length of wave 1 placed at the wave 2 low can take Tesla up to 1400 before a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 placed at the wave 4 low, then Tesla all in all, in my opinion, for waves 1, 2, 3, 4, and 5 can go all the way up to I believe this is the 1900s. So this is wave 1 and wave 2. The widest invalidation. Remember, we've been talking about Tesla for a bit. All right. I was told Tesla was real boring 2 years ago, right? Tesla's been a POS that doesn't move, right? AMD's been a POS that doesn't move. Bitcoin's been a POS that doesn't move, right? It's all about dopamine. And when people aren't getting entertained, even if it's the best stock in the world, you know, they're just going to call it a POS that doesn't move. And what we see is that those periods, you know, those boring, frustrating periods are when stocks are being heavily accumulated on the long straddle, long strangled screener, on iVolatility.com's top volume and open interest with low implied volatility screeners. Anyway, this is a wave 1 and wave 2. I think from this low, this could be another wave 1, another wave 2. It looks very similar to Enphase Energy. It looks pretty similar to, you know, maybe a few stocks we'll talk about where this, you know, if we are above 700, it's going to be explosive. Let's make that clear. If this is wave 3 of wave 3 that begins, Tesla won't stop at 1400. It won't. That's just to be conservative. That's just to kind of stick with what I've been saying for a while. If this is wave 3 of wave 3 that begins, you know, 1400 is not going to be the stop. We're going to go beyond 1400. But what I'm trying to show, even when we go beyond 1400, if we have a shallow wave 4 that retests the wave 1 high, and wave 5 is the length of wave 1 placed at the wave 4 low, then above 700, there's a pretty big path to 1950. So for me, the stop and the target are always kind of in proportion, right? So if my target is 1950, my stop probably can't be 690 because that's a little too tight for Tesla's beta. You know, if my target is just kind of 1400, you know, then, and I've been in Tesla for a long time, you know, maybe I do just move that stop up to 690, 700. Anyway, to me, the depth of the target is a direct relationship to the depth of the stop loss. Anyway, I think for 1950, 700 might be a little tight. That's all I'm saying. I think that there is nice evidence for Tesla from Enphase Energy. I think that this is starting to look pretty good. Now, I never want to get, you know, excited. You're not supposed to show emotions, you know, but this is looking good. I think this is a wave 1 and a wave 2 for Enphase Energy. I think from this low, this is another wave 1 and another wave 2 that's ended at the 61.8 to 78.6% fib. So you guys don't like the long term, right? You know, give us that needle in our arm, puppy trades. We need the short term. I think that Enphase Energy could be the short term, where this is wave 1 and wave 2. Enphase could get up to 287, the 161% fib of wave 3 up there before a shallow wave 4 and a wave of higher. Obviously, Enphase Energy getting to 287 would be fun, but what it would really do, confirm that on the big picture, this is wave 1 and wave 2. The length of wave 1 places the wave 2 low would give a kind of silly, very conservative wave 3 target. But even if we had a shallow wave 4 that retests the wave 1 high, and wave 5 is the length of wave 1 places the wave 4 low, I think all in all, the big picture of Enphase Energy can take it up to the 450s. In the shorter term, I think from this low, there's a pretty picture of not just Enphase Energy, honestly, not just clean energy, but there's a pretty picture of the market right now from Enphase. Wave 1, wave 2 at the 61.8% fib, wave 3, the 161.8% extension. Sometimes it is that simple, right? And I think that there's a pretty clear low of 113. 136 would be pretty tight for a, new-ish idea. But I like 113 as an invalidation for the big picture for not just Enphase Energy, not just, clean energy, but even for a lot of growth, a lot of, the market. I think this is a wave 1 and a wave 2. Enphase Energy, I'm expecting a big reaction from the 61.8 to 78.6% fib to begin a wave 3 of wave 3 up to the 280s. And I'm thinking that that's when First Solar is going to join this party. I think First Solar has given a lot of evidence for a while, but I think now it's going to do more than give evidence. It's going to actually participate. The evidence that First Solar has given has been pretty good. It's basically given a lot of evidence that for the past 8 or 9 years, clean energy has been accumulated by institutions, right? Now, classical traders are going to call this a failed breakdown. So from failed moves come fast moves. So their target's going to be, 5, right? And then when it makes the new high, their target's going to be, 400. But I think from an Elliott Wave perspective, this is wave 1 and wave 2. This is another wave 1 and another wave 2. And yes, we confirmed that to be the case because we broke above both of these wave 1 highs. When we broke above both of these wave 1 highs, I believe this was wave 1 and wave 2. So we can enter wave 3 of wave 3 of wave 3. All right, I know it sounds like I'm just saying 1, 2, 1, 2, 1, 2, right? But these are the charts that I focus on. Because, this isn't really supposed to make sense to a lot of people, right? It's not supposed to make sense to people who have been in the market for a while. Oh, yeah, First Solar's going to explode, but it's down right now, right? That doesn't make any sense. I think this is a wave 1 and a wave 2 at the 61.8% fib. We haven't seen, the thing with the nest is you haven't really seen the price action for a wave 3 in a long time, right? There's no wave 3 on this chart. And I think that we're going to see the first wave 3 that we've seen in a long time. Maybe the first wave 3 that we've seen ever for First Solar, where this is a wave 1 and wave 2. This is another wave 1 and another wave 2. So we're not really expecting that a explosive wave 3 of wave 3 is even possible. But I think it is. I think this is wave 1 and wave 2 at the 61.8% fib. 48 would be pretty wide. I think for First Solar, that's kind of where Enphase Energy above 113 might be a little better. Even, Tesla above 690 to 700 might be, a little tighter. And then 539 would be extremely wide. But maybe 48 is not the best level. I think that Enphase Energy and Tesla might get better levels, but this is a wave 1 and wave 2 in my opinion. So wave 3 of wave 3 can take First Solar up to the 180s, the 161.8% extension before shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 places the wave 4 low, then all in all waves 1, 2, 3, 4, and 5 can take First Solar up to the 215, 216 range. In my opinion, that just ends this black wave 3. We've got a lot of unfolding to do, what it's called as a series of 4-5, 4-5. But anyway, that First Solar getting into the 200s, yeah, I'm expecting a consolidation period, but in the big picture, that wouldn't be, the end, right? And a lot of people, they're so short-term minded that they can't even really, they're not capable of holding a stock from, 76 to the 200s, right? Because, there's going to be, pullbacks along the way. There's pullbacks now. But if people aren't concerned about being called bag holders in the short term and they kind of hedge for that downside risk by buying volatility, which is what I do, then they can hold positions long enough to see them bear fruit. So here's NEO. NEO is a big wave 1 and wave 2. It's a huge holding of QCLN with Enphase in Tesla. Those stocks we just went over. I think this is a wave 1 and ABC wave 2 for NEO at the 61.8 to 78.6% fib. So This is where we can see NEO begin a wave 3 out of an IPO base, right? And one thing that, is kind of, true is that stocks with more recent IPOs, younger stocks, they're so early in their life cycle that there's a much higher risk reward. And I think for NEO, if this is wave 1 and wave 2, the length of wave 1 places the wave 2 low. It sounds silly right now, but in the big picture, NEO getting to the 70s into the 80s could be a conservative wave 3 target before a shallow wave 4 and a wave 5 higher. If wave 4 retested the wave 1 high and wave 5 was the length of wave 1, places the wave 4 low, right? You can't say NEO's going to the 130s. You can't say NEO's even, going to go more than 400, 500% without people losing their mind. But I think this is a wave 1 and a wave 2 at the 78.6% fib. So for NEO, right now it's 17.63. I think that 13 is pretty tight. But above there, the length of wave 1 places wave 2 low, says that 13 ended a wave 2 at the 78.6% fib. And NEO can begin a large wave 3 with Tesla, with Enphase Energy, with First Solar, with a lot of the Chinese stocks we're about to go over, up into the 70s, up into the 80s. If it got past 66 in the long term, that could even open up much higher levels in the future. I think the mid 100s would be on the table above 66. So if we look at other kind of small cap EV ESG names, a lot of people, Tesla and Enphase Energy, they think they're all competing with NEO. There's kind of more, direct members of Chinese clean energy. I think that this is another, possible IPO base in this sector where we have a wave 1 and a wave 2 for XPEV, the very scary wave 1 and wave 2. 18's a little tight, 17's basically the same level, above 17 to 18. I'm going to honestly just hold, XPEV forever. I think I need to turn off my alarm. Yeah, I had my alarm set. Go check the price of a stock. Anyway, I thought I had my alarm turned off. Anyway, this is XPEV. I think it's a wave 1 and a wave 2. A large wave 3 could begin if it's above 17 to 18. Very similar to NEO. Kind of seems outlandish now, but I think ultimately this wave 1 high getting broken of 74 could open up, a lot of upside in the future. And the thing with NEO, the thing with XPEV, the thing with Lee, them breaking their wave 1 highs, it sounds crazy because that's a 300, 400% rally from the current prices. But from a Elliott Wave perspective, when you break the wave 1 high after a 61.8 to 78.6% retracement, you don't stop at the wave 1 high. You kind of go a lot further than that for wave 3 before a shallow wave 4 and a wave 5 higher. One thing I wanted to do with XPEV and Lee and NEO was talk about other kind of stocks in the Chinese sector. We'll talk about Alibaba and NetEase and JD. In this kind of e-commerce realm. I think this is a wave 1 and a wave 2 for Alibaba at the 78.6% fib. This low of 73 isn't bad to be above. I think the widest invalidation is this low of 57. So there's a higher risk and higher reward with, the sexier growth stocks, and the idea that someone's going to, buy a growth stock and put a 5% trailing stop. That sounds great on FinTwit when you type it, but that's not, practical. That doesn't, the best way for me to manage risk with, a lot of growth stocks is, one with the option straddles on, maybe some of the more growth ETFs like ICLN that I went over in my last video. But another, a great one for me is to scale into a sector over time, and most importantly, take smaller positions based on how, volatile the stock is. So if a stock's a growth stock, it's gets half the position size than I put into a value stock. I think for Alibaba, this is a wave 1 and a wave 2, and this is the 78.6% fib. And when we talk about NetEase in a second, when we talk about, we talk about Wayfair a lot. I'll talk about JD as well. This is kind of a holistic view, even in the e-cash sector more broadly, right? With PayPal, with Shopify, with Squarecash, this is not supposed to be something that was made easy. But I think this is a wave 1 and a wave 2 for Alibaba, and so a wave 3 kind of very similar to XPEV and NEO. Wave 3 at minimum breaks the wave 1 high, so that's already a 300, 400% gain, right? That sounds crazy. Oh, Puppy Trade says, Alibaba and NEO are going to triple. It's in the long term. It's in the big picture that this wave 3 can get broken. This wave 3 can go beyond the wave 1 high of 319. even if there was a shallow wave 4, the retest of wave 1 high, and wave 5 was the length of wave 1 placed at the wave 4 low, all in all, Alibaba can go up to the 500s in the big picture. It's not going to happen tomorrow, right? But I do think that I'm eventually going to get to sell at least some of the Alibaba that I bought at 165 up in the 500s, the mid 500s. I didn't take a huge position, but I do think that the Chinese growth sector isn't really going to be a sector that fund managers can ignore, right? Because I think when this sector gets going, they're going to hog a lot of alpha. I talked about the emerging markets a lot. I talked about the Hong Seng in my last video. For NetEase, this is a wave 1 and a wave 2. It's a Chinese internet name, right? It basically, if NetEase is going one way, then Alibaba is going probably the same direction. Maybe it's not every single day that plays out, but over time, that's where it's going to end up. I think this is a wave 1 and a wave 2 for NetEase at the 61.8 to 78.6% fib. 57 is getting pretty wide. I think that the wick of 68 is a little tighter, but I think this is a wave 1 and a wave 2. The minimum wave 3 target is the length of wave 1 placed at the wave 2 low, which would give a wave 3 minimum target of 166 before a shallow wave 4 that retests the wave 1 high, and a wave 5 that is at least the length of wave 1 and placed at the wave 4 low. All in all, waves 1, 2, 3, 4, and 5 can take NetEase up to the 230s. And in my opinion, that's just going to end this black wave 3. So what I basically just said is that, by the time all this plays out, maybe a long period of time goes by. It's think about how many earnings reports we'll have seen. Think about how many Fed meetings we'll have seen. Think about how many, just random events that no one could have predicted. That no one could have predicted that we will have seen. Right? You can't just always be where the news is telling you to be in that moment. It's like what Wayne Gretzky said, you skate to where the puck is going. I think that right now it's kind of hard to see how could Alibaba be in the 500s one day? How could Neo be in the 80s one day, right? How could NetEase be in the 230s, right? That's impossible, right? This guy's, whatever. But from an Elliott Wave perspective, that's all the analysis that I can provide. I think this is a wave 1 and a wave 2 at the 61.8% fib. The length of wave 1 placed at the wave 2 low can take NetEase up to the 160s before a shallow wave 4 and a wave 5 higher. This isn't supposed to be something that's easy, right? And I think it's worth talking about the emerging markets again. This is a decade and a half in progress, formation, right? Think about how many quarterly reports and, how many Fed meetings and how many whatever, we've seen. But it's all led up, in my opinion, to the emerging markets breaking out and back testing a 10, 15-year base. This is not going to be something that's easy to catch. It's not going to be something that, a lot of retail traders drawing RSI divergence and, flipping their bias every day are going to participate in. But I think that the emerging markets, NetEase, there's a lot of evidence that this is 10 years in the making, right? What we just talked about with First Solar, a nest of, that's been in progress since 2012. This is a nest that's been in progress since 2008. All a nest is a series of 1, 2, 1, 2, 1, 2 without a wave 3 in the same cycle. And I believe that's the case. We can just start from 2016, wave 1, wave 2. Then from the 2020 low, another wave 1 and a wave 2 that ended at the 61.8% fib for EEM, right? This is a global market index. A lot of foreign stocks would do quite better than what we're about to talk about EEM doing if this played out. I think above 36, the length of wave 1 placed at the wave 2 low, says that 70 is a kind of a minimum wave 3 target. We have a shallow wave 4 that retests the wave 1 high. If wave 5 is the length of wave 1 placed at the wave 4 low, then the emerging markets getting into the upper 80s would just end this blue wave 3, in my opinion. We'd have a shallow wave 4 and a wave 5 higher. But even then, we're talking about a long period of time going by. We're also talking about a lot of waves unfolding, right? Because wave 3 going up to 70 before a shallow wave 4 and a wave 5 higher, that just ends this blue wave 3, in my opinion. And then we got to end this black wave 3. Then we got to end this red wave 3 down the road. Okay, so being caught up in what we're talking about in the news, tomorrow, what we're talking about in the news yesterday, that's never good. And I can almost promise you start going to options, long straddle, long strangle, you start kind of taking a note, maybe even just making a list of stocks that are on the screener every day, you'll kind of start to see that the news that we hear about, at least some people know about in advance. I've well documented, at least most recently for oil, all the oil stocks, every single one of them, on this screener, on iVolatility.com's low implied volatility, high open interest, high volume. I participated in the rally, and what we get from January to March, just the most biggest slew of bullish headlines for oil we could have possibly gotten. Anyway, and it's not just oil, right? That happened with tech in May and April of last year, and I think it's about to happen with tech again. If we look at JD, this is a wave 1 and a wave 2 at the 61.8 to 78.6% fib. I think this is a good piece of evidence, not just for Chinese stocks, but a way to transition into more e-commerce and e-cash. I think this really focuses on advertising, but I think this is a wave 1 and a wave 2 for JD. A pretty dramatic ABC correction at the 61.8 to 78.6% fib. 41 would be quite wide, but the length of wave 1 places the wave 2 low ultimately says JD could go on a wave 3 up to the 130s before a shallow wave 4 and a wave 5 higher. I just mess with my fibs, but if we don't need to do if wave 4 retests the wave 1 high and wave 5 is the length of wave 1 places the wave 4 low, taking JD up to 197 as the long-term target. But I think this is just another one of the Chinese stocks in the growth sector, in the internet sector, possibly ending a massive wave 2, with not just the Chinese stocks, but the emerging markets. Huge development. Not something that's supposed to be very easy to catch. But I do think this is wave 1 and wave 2 at the 61.8 to 78.6% fib. We're going to find out why they made China quite difficult when JD's in the 130s, because I don't think that's going to be where wave 3 ends. We'll have a shallow wave 4 that retests the wave 1 high, and ultimately a wave 5 higher. Here's Amazon. Amazon's continued to basically track Netflix. Amazon and Netflix, I remember they formed this bull flag. You can't really see it on the weekly chart. I remember they formed this bull flag for a little bit, and I noticed it in 2020, and then they kind of hit that bull flag equal X target together. Netflix and Amazon were kind of consolidating together, and then they both obviously consolidated for the past year and a half, had a fake out to the upside, and then a breakdown. We'll talk about what those waves could be from an Elliott wave perspective. I think it is interesting that we've seen Netflix and Amazon move almost dollar for dollar. This is a wave 1 and a wave 2 at the 50 to 61.8% fib. I think Netflix and Amazon. Netflix broke below the 2018 low, if I'm not mistaken. Amazon hasn't. I think this is a wave 1 and an ABC wave 2 at the 50 to 61.8% fib. Above the 78.6% fib, which is getting a little wider than originally, is 1834. So above 1834, this is wave 1 and wave 2. I expect Amazon to enter wave 3. And that, if it's the length of wave 1 places the wave 2 low, still takes Amazon up to 4,825. Now, what's the difference in Amazon now versus Amazon a few weeks ago? Well, we're still talking about Amazon going to 4,825. In my opinion, that's not going to be where a wave 5 ends. We're at the 50 to 61.8% fib, and this is where wave theory and Wyckoff kind of separate themselves from other forms of technical analysis, where they acknowledge that corrections can be a good thing. And I think that this deeper correction to the 50 to 61.8% fib, if we got right down to 2,250, that'd be the 61.8% fib, and then we're not calling this any type of wave 4. Wave 4 ends at the 38.2% fib to 50% fib. Typically, anything below the 50% fib, especially the 61.8% fib, that's labeled as a wave 2. I think this is wave 1 and wave 2 at the 50 to 61.8% fib. So that means the length of wave 1 places the wave 2 low, taking Amazon to 4,825, could just be a minimum wave 3 target. We have a shallow wave 4 and a wave 5 higher. So that's where maybe a larger, a wider stop of 1834 would come in for that wider target, for the fact that 4,825, if we ever did see Amazon above 3,773, then I don't believe 4,825 would be the target. I think it'd be a target, and a minimum target before a shallow wave 4 and a wave 5 higher. I think with Amazon, we just went over a lot of e-commerce stocks, a lot of e-cash stocks. Here is Square, another one. I think this is a wave 1 and a wave 2. It's unfortunate to me that we're going to not have Twitter trading anymore. I don't normally, let you guys know when I'm bummed out, but man, it doesn't look like we're going to have chart history from Twitter anymore. It was giving a lot of evidence, but I thought that Squarecash and Twitter had something in common, where they form a wave 1 and a wave 2, and then they had another wave 1 and another wave 2 at the 61.8 to 78.6% fib. And one thing I kind of had said about Twitter and Squarecash was they both give, wave counts from before March of 2020. They formed this wave 1 and wave 2. That's led me to believe that this was a large wave 3 in progress. And when we got below the 50 to 61.8% fib, in my opinion, it became a little more likely that below 160, this wasn't a wave 3 and a wave 4. It was another wave 1 and another wave 2 at the 60 to 71.8% fib. So I think 82 isn't a bad level to be above. The length of wave 1 plays the wave 2 low, can go take Squarecash up to 339 before a shallow wave 4 and a wave 5 higher. The length of wave 1 places the wave 4 low, ultimately could give a wave 5 target in the 500s. Now, I know talking about Square going into the 500s when it's at 100, right? We're just asking for all caps comments, but there are, this is what growth stocks do, right? They have the scary corrections up, bag holder, right? Up, the e-cash and e-commerce is a fad, right? That's what they said when, Amazon and MasterCard had 61.8% retracements in 2008, 2009. I think what we're going to see is a pretty similar result develop from this. This is the wave 1 and wave 2. At the 78.6% fib, we can see a wave 3 begin up to the 340s before a shallow wave 4 and a wave 5 higher in the long term. Here's Roku. We're 1 for 1 on Roku. I think we're 1 for 2 on Roku, Neo, and PayPal, where we caught this rally going up, and then they broke below the May lows this way going down. But I think for Roku, this is a clear 1, 2, 3, 4, 5 waves impulse. And I think this is an ABC correction that's ended at the 78.6% fib. So the problem with growth stocks, if there is, a problem, is that a lot of times the invalidation levels are just frankly too wide to be used as stops. So that's why I use lower position sizes for myself personally. They don't all work out. Some of them do. Some of them, are still to be determined. But I think Roku having to stop at 58, that kind of doesn't really make sense. And that's just where a small wave 2 ended. I guess the biggest invalidation is, Roku's all-time the beginning of wave 1. But the thing with recent IPO stocks is that they're so young in their life cycle. If you really go look at Netflix's chart, if you go look at Amazon's chart and Bitcoin's chart, just what they do from 2000 to 2012, 2015, they each have about 2 or 3 of these, each of them. And some of them are more dramatic, but 61.8 to 78.6% retracements. We don't like to talk about them in our substacks, but that's common in growth. And I think this is a 1, 2, 3, 4, 5 wave 1 and wave 2. I think this is where we can see that Netflix in 2011 wave 3 begin. All right, I think that's the upside. Right now, the downside is, in my opinion, best managed with position sizing. That's how I've been going about a lot of my growth investing. But I guess above 58, this is wave 1 and wave 2. The length of wave 1 places the wave 2 low, gives a minimum wave 3 target in the big picture of about 547 before a shallow wave 4 and a wave 5 higher. Wave 4 retests the wave 1 high, and wave 5 is the length of wave 1 places the wave 4 low, right? There are stocks that go up 800%. There are stocks that over years, over time, go up, 700 to 1,000%. It happens, and I think that this kind of suggests wave 1, wave 2, kind of similar to maybe Neo, kind of similar to Squarecash, kind of similar to some of these social media stocks like Snapchat. We could see a few of them right in front of us, right? And guess what? They're not going to be very popular. They're not going to be. If they were popular, that'd be a bad thing. But I think we look at Snapchat, we look at Squarecash, we look at Shopify, we look at Enphase Energy, we look at a lot of the stocks we just went over. It's kind of a holistic view, even the emerging markets itself, that we're going to see a lot of stocks we're not used to, at least recently, being huge apex predators in this market, becoming the monsters we know they can be. I think this is a 1, 2, 3, 4, 5 wave 1 for Snapchat and the ABC wave 2 at the 61.8 to 78.6% fib above 21. The length of wave 1 places the wave 2 low, can take Snap up to 102 before a shallow wave 4 and a wave of higher. I'll show you guys what I was talking about with Twitter. I think we're losing Twitter's chart history. I think that now that Twitter's getting bought, it's like halted or something. It's just going to kind of dwindle at 48, 49. But, man, I thought this was giving a lot of evidence. I still think it's giving a lot of evidence. So I'm not sure what's going to happen to Twitter's chart. But I thought we had a beautiful wave 1 and a wave 2. And now it looks like we've got a little bit of a halt going because Twitter's gotten bought. But anyway, I thought this was a wave 1 and a wave 2, a very pretty wave 2 that ended at the 78.6% fib. The length of wave 1 places the wave 2 low. Should take Twitter up to 92 before a shallow wave 4 and a wave 5 higher. I guess now we'll never know. But anyway, it was this was a beautiful chart, man. This was a beautiful chart. Wave 1, wave 2, another wave 1, another wave 2, wave 3 of wave 3. We're going to explode, and Elon buys it. So, anyway, whatever. Twitter, Facebook, and Snapchat, I do think they're all going to do well. We'll see what happens to Twitter. But if you look at Facebook, I think this is a wave 1 and a wave 2. I'm not someone who reacts to earnings. We got a little bit of a movement at the 78.6% fib. In my opinion, this is a wave 1 and a wave 2. I went over in a previous post how even if this was all wave 1 from this low in 2018 and this was wave 2, it doesn't really make a difference. It just has a wider invalidation. But I think 137 right now is a great level. It's getting a little wide the further we get away from it, but I think this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low can take Facebook or Meta up to 419 before a shallow wave 4 and a wave of higher. The length of wave 1 placed at the wave 4 low, all in all, says Facebook could go up into the 600. So that's where the idea, not just the growth opportunity, but even the big tech opportunity where, a lot of stocks that we know, right, they're kind of the blue chips. When they get running, we just say, oh, duh, right? But then all of a sudden, it's not easy to say, oh, duh, during the pullback. I think this is the 78.6% fib. I think we're going to be saying, oh, duh, about Facebook again in the 400s. Here's Shopify. I think this is one of the prettier charts for e-commerce. Certainly for a lot of the e-commerce stocks we've gone over in this video. 1, 2, 3, 4, 5, big wave 1. Wave 2 at the 78.6% fib. Now we can enter wave 3. This is going to be made difficult. I don't think Shopify is going to be easy, but above 305, this is wave 1 and wave 2. The length of wave 1 placed at the wave 2 low. It says that we will see Shopify above 1762. In my opinion, that's going to be within a wave 3 that goes at minimum to 2,163 before a shallow wave 4 and a wave of higher. I think this is a clear 1, 2, 3, 4, 5 waves impulse. We're at the 78.6% fib. Shopify is just in the long list of growth stocks and e-cash stocks where we can see stocks we haven't seen do well in a bit. We're not really used to talking about, some of these ARK holdings doing well. I think that's going to change. I think crypto even, could be a part of that. Here's Ethereum. It's giving a little, Bitcoin's getting close to 29K, but Ethereum's pretty far from it. So the widest level for crypto is about 1709. This is a wave 1 and a wave 2 for Ethereum that ended at the 78.6% fib. The length of wave 1 placed at the wave 2 low takes Ethereum up to 5,359. If we actually do get to 4,865, then this would not be the wave 3 target. Wave 3 would actually be the 161.8% extension of wave 1, which would be further. What I'm trying to show, even if wave 3 went to 5,359 and we had a shallow wave 4 that retested the wave 1 high, if wave 5 was the length of wave 1 placed at the wave 4 low, then we could see Ethereum go up to 8,000. I think 2163 is pretty tight for Ethereum's high beta. I think 1709 is a great low for a lot of crypto bulls to be looking at. Look at Bitcoin right now. It's pretty similar, except for Bitcoin's getting a little close to 29K. So I think Bitcoin and Ethereum, they have to be viewed together. Let's say 1, 2, 3, 4, 5, a big wave 1 and a wave 2 for Bitcoin. I think this is a wave 1 and a wave 2 at the 78.6% fib, about 28.9K. It's just like Ethereum, wave 1, wave 2. If we actually get up to 73K, that's just the minimum wave 3 target. Even if we had a shallow wave 4, the retest of the wave 1 high, if wave 5 was the length of wave 1 placed at the wave 4 low, and all in all, waves 1, 2, 3, 4, and 5 can take Bitcoin up to that big 109,000 number, right? Everyone's got their sell limit order at 109K, I'm sure. Here is Ripple. I think Ripple and Solana and Cardano, you got to look at all of them. You can't just look at Bitcoin. I think this is wave 1 and wave 2 for Ripple. I think this is another wave 1 and another wave 2. The end at the 78.6% fib. I'll move my fibs over slightly. You got all these decimal points. Anyway, I think this is a wave 1 and a wave 2 that formed from this low for XRP at the 78.6% fib. Ripple, another with Bitcoins and Ethereum, 600, 700%, winner, right? And a lot of times, if you're too short-minded, you're too, thinking about getting called a bag holder tomorrow, you're never going to see something with a high beta really play out. And I think with a lot of the ARK names, with a lot of the crypto names, time will ultimately say the volatility was worth it for those names. Here's the wave 1 and a wave 2. I think that if we take the beginning of wave 1, connect it with the high of wave 1 and the low of wave 2, ultimately Ripple's going to the lower bound of the pitchfork and then the median. In the shorter term, I think this is a wave 1 and a wave 2. For the extremely high beta of Ripple, 51 cents is a little silly. I think that this is one where I was talking about it at 25, 26 cents. I think position sizing is always, with something with a real high beta, the best risk management way to go. But I think this is wave 1 and wave 2. If there had to be, levels, it would be with Ethereum and Bitcoin. Those levels I just went over, but I think this is a wave 1 and wave 2, the 78.6% fib. Wave 3 can take Ripple up to the 161.8% extension, which is about 3.07 before a shallow wave 4 and a wave 5 higher. Here is Solana, almost identical chart to Cardano. I think this is one where, crypto bears, they just got to think about it. I'm not saying they got to do anything about it, but this doesn't really look like the Bitcoin bear count that we see thrown around. Doesn't really look like a lot of the, Ethereum charts that take it to zero, being thrown around. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 at the 61.8 to 78.6% fib. I like it above 55 a lot. The length of wave 1 places the wave 2 low, says Solana can go up to 337. And believe it or not, that'd be a minimum wave 3 target before a shallow wave 4 and a wave 5 higher.